Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we are going to throw spotlight on investing in a volatile market, especially in an election year. We all know that elections are halfway through, so how do our viewers prepare themselves for any major fall in the volatility that we've been seeing? Where do they park their money? Should they stay put? Should they increase their cash levels? We'll discuss this and more with A Balasubramanian, the Managing Director and Chief Executive Officer at Aditya Birla Sun Life AMC. Thank you so much for joining us today, and this is the time when the investors need a sane voice to guide them through what's happening in the markets as well. Before I ask you about market volatility in general, there has been an update on KYC rules as well. There's some relaxation that has come by. I wanted to understand if it is temporary, it is something that SEBI will work on more. And secondly, did KYC have any impact on SIP numbers in terms of redemptions? Was there any conversation that went on with AMFI, the mutual fund houses and SEBI?
I think thanks, Sonal, for having me part of the show today. I think with respect to the KFC, of course, this is nothing but making your KFC validated because in the interest of investors. So this is one area where both AMFI and SEBI has worked together to see to it the future of the investors on doing the KFC remains robust and also in line with the broader regulation in which I think one should adhere to. I think things have been far better. Of course, the general noise levels were actually higher than what was actually the real problem. There is of course no problem. So one good thing on industry is we always work in a very coordinated manner. There is an ops committee which is part of AMFI. There is a series of people I think get involved from even the regulation to see to it the investors are never put in inconvenience. The distributors are also able to give a better service to their customers. But as I speak today, I think the issue is probably a lot more seamless as I speak today. But definitely if somebody is actually making new application somewhere else, they need to of course be fully KYC. There is one system that the mutual funds have created, which is KRA systems. I think the best system for in the capital market, any regulator in the world has created is a KRA, a single point KYC verification platform for investors in the capital market. This is only unified platform which caters the needs of the mutual funds, caters the needs of the capital market investors, caters the needs of AIF, and the entire demat account opening, it all comes in one platform. And what is being done in the, of course, interest of investors in the long run, so that your money is safe. Even updating mobile numbers and email address, at the end of the day, we must take into account in the overall the way systems are getting better in online transactions. Definitely keep your database more healthier is more important. So therefore, whatever is being done is with that intention. I think it's basically taking into account interest of both investors and the distribution community as well.
So the relaxation that came by today as per the SEBI circular, you don't think that is permanent and there could be more modifications to this? You think this is it right now?
No, I think it's more of enabling, right? I think it's, see, anything that comes as a regulation, it is in the best interest of system as a whole.
Yeah.
Therefore, any relaxation comes in taking into account the feedback that would have gone. So how receptive they are feedback, basis which how to create the convenience for the whole ecosystem to function very smoothly. Therefore, these relaxations, if it is the nature of going to do good for the industry in the long run, I'm sure some of them would become permanent. Some of them, of course, once you fully complied with, then it's much easier actually. There's not even need to relax actually. Automatically get adjusted to the new way of functioning. So therefore, this is something should be seen as if that yes, we are working together in understanding the market dynamics and see to it that ecosystems always remains robust.
Okay, all right. We take that point, and that's been an opinion from the other AMC CEOs as well. But let's talk about investments now, because there's been so much volatility and it's ahead of the election year. What do you suggest to the investors? What should their strategy be right now in a volatile market like this? And have you seen such volatility in earlier elections as well? What's been the strategy then?
So this year I would say the volatility is relatively less compared to the previous elections or maybe previous events that we would have seen in the past. And given the fact today it's not about predicting who will come to the power. It's only the question of how much is win and so on and so forth. I think what is most important from the market point of view, continuity factor. Second, the continuity of policies, continuity of driving the Indian economy to go to the $10 economy. I think if you look at it from all such angles, I think we are in the right path. Therefore, from an investor's point of view, one should not pay too much attention with the current market volatility and then what's going to be the outcome of elections, so on and so forth. I think one has to look at, put the leap of faith for the, let's say, next 5 years or next 10 years kind of thing. We have to look at beyond, say, a 5-year period. We have to look at the next decade. And if you look at the next decade, Indian market will become one of the most bigger market in the world. And that is being the case from investors' point of view. It is an opportunity actually that market provides for you to plan your investment from a longer term point of view. One good thing that has happened in the investor's mind, as well as the way mutual industries, including Aditya mutual fund, have been promoting the best way to invest in mutual fund is the SIP we are investing. Yeah. It's as simple as that. Though it's simple, but I think the discipline that one has to bring on, continue to keep your investment in SIPs is the key to the success. Let the market be volatile. Let the market have their own predictions. Doesn't matter. But as long as the trajectory is actually something is more promising, we must stick to that conviction and faith that yes, the future is bright.
Okay, and that shows in the SIP numbers, record high yet again in the month of April. But what is your view on valuations across market caps? Because we did see that stress test in the month of March, but small caps have come back in terms of flows. Do you think there's still some fraud in some of the market caps?
So I don't think there's a fraud. I think in every market, I think I've seen historically being part of the market for long. In every market, you'll always see some small pockets, some issues will be there. But the smaller issue should not make a judgment to be made that it's a problem of whole market. That's something which I think one has to remove that myth. And second is, we must admit the fact that as the economy is broadening, it's not just restricted to one corridor is doing very well, rest of the corridor is not doing very well. Or one segment of the market is doing very well, rest of them are not doing well. Or one sector is doing well, rest of them are doing well. Or we cannot even come to the conclusion, one part of the country is doing well, rest of the country is not doing well. I think if you look at it on a holistic basis, the breadth and width in the economy is rising. Thanks to the spending by the government, now projected investment is coming in. I think it's all cutting across all sectors, not just restricted to one sector, not restricted only roads. It's cutting across multiple sectors, covering various infrastructure sectors like power, energy, then we have road, then we have railways, then we have airport, and many such things are happening. Therefore, that is increasing the breadth and width of the market. And therefore, the more and more companies who have never discovered value for themselves or maybe never discovered the true potential from value creation point of view, that's what we are seeing in the small and mid-cap segment. I think the number of companies that are participating in the small and mid-cap segment from a value unlocking point of view, it is given the fact that earlier they never got that benefit. The last but not the benefit which is coming for that segment is the low interest rate regime. What was certain interest cost in India have not gone up to the borrowers who are in the small and mid-cap space, unlike the past. So it benefits them. I think in that sense, if you look at it, I think you will broadly see the market have a good mix between the large and mid-cap and small cap. And that I think in my own belief will continue. But valuation is something is a function of how the growth expectation is. As long as the growth expectation remains strong, then valuation is always point of debate. The moment you see the growth expectation derails, then the valuation comes into the question mark, then you will start assuming high PE multiples, high price to book multiples, therefore earnings are not supporting. As it stands today, earnings are supporting, outlook is supporting, and at the same time, I think we'll be able to sustain somewhere around 7 or 8% rate of growth. If that is the case, corporate earnings should be in the range of about 14 to 18% kind of range. If it is there, then market by and large should be resilient and should continue the overall momentum.
Okay, so when you say market could be resilient and could continue their momentum, take us through your process. What are some of the checks that you would put on any new potential idea? Because there are so many right now. We are seeing new schemes, new sectors come about. What's your strategy here?
So of course, as a fund house, we have a set process in terms of filtering of ideas. I think our job is to look at the broader market and the filter ideas and identify them that on the basis of the expectation that the companies will have for the next 3 years or 5 years, 7 years, in terms of the broader strategy that they have, then what the kind of rate of growth will be there in each of the product, how this product will remain relevant. This is something as part of a filtering process, as Aditya Mutual Fund put it, before even get them in the investment universe. I think valuation is always something we look at it on a relative basis, and the rate of growth versus on a relative basis. And you try and find growth versus value. And sometimes you will find value even in the growth market, right? Sometimes it not necessarily you will not find value companies like high growth companies, high growth sectors. This is something as a principle they always do it. And our process is very robust in terms of understanding where we are, in terms of the philosophy that we have kept all these years. That's something it remains. Even today's market, you can find winners purely on the basis of the way the business model is being built. And that, I think, will remain an ongoing process. We cannot ignore the market at all-time high, therefore we will not find enough winners in the market. And that's going to be ongoing basis will remain. Except that we have to always look at the relative. At the end of the day, the market is more of a relative game. As long as we are able to get the relative judgment reasonably right, then we are able to get it right. That's what as a fund house last 30 years, we have, I will not say I have mastered it. I will probably say we have practiced it to the reasonably good intent.
Okay, interesting. So we spoke about equity markets. How are debt markets looking for you right now? There is a possibility of a rate cut. Yields could go higher. Do you think it's a good time for investors to look at debt funds? Because this is one segment which is a little confusing for retail investors, so to say. Correct.
I think in the debt market, we'll have to look at it from a little different angle from equity. It's more of a yield. It's what is your carry. So today, if you look at where the interest rates are, whether it is take government bonds in India, T-bills if you take close to about 7%, and a 10-year bond is close to about 7.2%. And if you look at the corporate bonds, it's ranging anywhere between 8 to 8.5% kind of things. If you look at that compared with any other relative instruments that offers similar kind of experience, are they giving? Or the mutual fund, the investment they make are giving better opportunity. I think if you look at that angle, carry is good. As well, there is a narrative that the high interest rate regime with high interest rates will remain for longer, which basically the current interest will remain for longer. Even if it stays for 1 year, the carry takes care of your potential return that you want to generate. In that context, if you look at it, mutual fund fixed income definitely plays a role. At the end of the day, in any market, asset allocation plays a larger role. And as you asked a question earlier about the equity market, having seen a significant rise in the equity market, we must also be prepared for 1 or 2 years the market may not give any return. In such a scenario, what do you do? You must have an asset allocation. Therefore, in that context, fixed income plays a very large role, for which risk reward is significantly higher. If not the return, I am saying, return is not significantly higher. Is it something is too low? Is no. It's at somewhere in the middle. Okay. Also in the next year, in the year 2024-25, let us assume a scenario the US start cutting interest rates, then you start getting some kind of capital gain on the fixed income space as well. That opportunity in my view will come for those investing today, those who are investing in fixed income schemes today, will get to reap the benefit as they move into 24-26.
So right
as
now
interest rates start coming down. Therefore, fixed income should be part of the consideration, not necessarily it has to have a larger component of the portfolio, but it should be part of the consideration. Even if a small amount, they must consider and put it as part of the asset allocation strategy.
So right now, if somebody is looking at debt fund, it could be the right time because there is a possibility of a rate cut.
The following year, at least you get the carry.
Yeah,
I think one good thing on fixed income is if I invest in a 8% coupon bearing instrument, I continue to get on a day-to-day basis an accrual. Of course, fluctuation comes on the base, up and down on price comes on the base of interest rate moving up or interest rate moving down. So what is the probability of interest rates going up today is relatively less. What is the probability of interest rate going down is relatively higher. So if that is the case, then you also get the added advantage on the overall portfolio.
Okay, and it's the inverse relationship with the interest rate for debt funds, right?
Exactly.
My director is telling me we have little less time, so quickly I would like to squeeze in one more question. What would an allocation look like for a low-risk investor versus a high-risk investor? I know it would be different, considering different lives of investors, but if there was one answer for that.
So I think the balanced advantage fund, basically the hybrid assets could be one for the low-risk investors, given the fact it has got a mix of equity and debt. Multi-asset allocation fund, which invests, of course, across asset classes, both in equity, gold and silver, and REIT and InvIT, could be another option for low-risk investors. High-risk equity investors should, of course, obviously stay invested in equity. Even if you come and invest in this point of time in equity, but make this investment stay with you in equity investment for more than 3 years to reap the benefit.
Okay, that's a very specific answer. So thank you so much for that. And thank you so much for joining us today and giving us all those details. So the markets have been so volatile. It makes investors think what to do. Should we stay put or should we cash out? Thank you so much for joining us today in the studio.
Thank you.
Okay, with that, we'll take your leave on this edition of MF Corner. But stay tuned for Closing Bell to take you through the last hour of trade.